All right, Yield Nerds episode 181. As you can see, it is some choppy weather out there, and I am trying to momentum trade with my sail made out of money in front of the New York Stock Exchange. It's a little bit hard. I'll tell you what I'm doing and how it is working out. Well, we're up to 497 subscribers. Feels amazing to me. Thank you for your support. If you're new to the show, please use the roadmap that lays it out in chronological order. There are a handful of other playlists as well, and give it a try. Most importantly, remember that I have no magical powers. I am wrong many times, and I'm going to show you a couple of areas where I guessed wrong and I got smacked. And that algorithm needed some tweaking. I'll tell you more about it. Let's get going. First of all, what is the market temperature? It's a little rough seas out there. I'll review my performance and the market's performance shortly. The yield curve is showing some very interesting behavior. Some would argue it's scary, and we'll find out what that means as well. And I'll tell you where I got smacked by the algorithm. So, a couple quick things. My portfolio now is very tech heavy because I blindly follow my algorithm, and I'll tell you what it did and what it did not do. However, when it comes to asset allocation, it indeed has a different kind of concentration. About half of my portfolio is in short-term treasuries, and I have a small percentage of stocks. I have in munis, about 20 odd percent. That is my bedrock at the moment. And government related, which is really agency bonds, FHLB and FFCB, I have about 10, 11%. And so that's kind of how I choose my portfolio. Now, what does it do in terms of good days and bad? You would imagine a fixed income portfolio is steady as a rock. And I'll tell you what happened. Um, and of course, I have some corporate bonds, and I saved that for last because that ended up being my Achilles heel in the last 2 weeks. And I'll tell you more. Well, what has happened to the yield curve in the last three-ish weeks? Something very interesting. Before I go further, I want to make sure you know that I am not a wealth management advisor. This is not investment advice. It is education that I'm sharing with you. Look at that. The yield curve in the last 3 weeks, if you go from around September to now, or even from late October to now, the yield curve has exhibited a behavior called bear steepening, which means the tail end of the yield curve goes up. If the tail end goes up, it means the market is saying, I'm not sure I want to hold the long durations anymore, and you're going to pay me more to hold it. And that's a very interesting concept because if it goes up more and more and more, at some point people will say, okay, that's a very sweet deal. I will hold longer duration. However, if you already made a move to longer duration, and I did in some ways, then all of those bonds have come crashing. Well, so here is what this did. On the one hand, you could make the argument that, hey, don't increase duration. Bear steepening is happening. Wait, bonds will crash, and then you can buy them, and now you will enjoy a higher yield. Well, I try my best to just have a simple formula. I have a couple of filters for bonds, and whether the tail steepens, the bear steepens, all of that is academic to me. If bonds meet my filter, I buy them. If they don't meet my filter, I don't buy them. But here is what happens to bonds that I already hold. Bonds that I already hold for the first time in a long time dipped. So during the equity crash that happened, during that time when the AI trade got a little choppy and gold crashed, ironically, some of those margins may have been maintained by long-term treasury bonds or long-term municipal bonds. I don't know. But it looks like people who held those bonds were forced to sell them. And when they sold them, the value of those bonds dipped. None of this meant I sold anything. I just kept all of my bonds, but I have not seen my bond portfolio go down. And this is the first time. I guess there is a first time for everything. Stocks and bonds crash together. And so that was an interesting lesson to me. Thankfully, I did not shift a whole lot of my portfolio to the longer duration, but whatever I did shift got walloped. And my corporate bond portfolio is the one that took a really severe hit. But I'm not selling any of them. I'm just keeping the income for now. So the litmus test to me, so to speak, is bond price crash, what I had crashed. can I go buy new bonds at a price that is better than what I paid? That's what I look for. And so if it is an investment grade corporate bond, I look for a very high yield to maturity, 5.6%. I look for a very high coupon, 4.7%. If I find investment grade corporate bonds that meet those criteria, I'll buy. Otherwise, even if a bond that I already own crashes, but the yield to maturity does not exceed 5.6%, I don't blink. And the reason I don't is because, in my view, I'd rather hold a treasury that pays a lower interest or a municipal bond that pays a lower interest because there are tax advantages than buy corporate bonds. That's the way I think. Now, what about muni bonds? Here the bar is different. I'm willing to go longer on the duration of muni bonds. I'd even go to 15 and 20 years instead of 10 years on corp. And I do have minimums. The muni bond coupons have to be more than 4.25, and if I'm buying longer duration, the coupons have to be more than 5%, and I also do not pay above par. So if they are trading at or below par and they pay a healthy coupon, I will buy. In the last 3 weeks, I have bought zero bonds. So as much as my bond portfolio quote crashed in value, I really couldn't replace it with new bonds, which means I needed to park my maturing treasuries somewhere else. If I cannot buy bonds, what do you think I should do? Well, I can keep renewing short-term treasuries, wait for another day, or I can go to equities. And that is exactly what I did. 3 weeks ago, I had 4.6% in equities, and now I have 5.8. And so when I could not buy bonds and bond prices were crashing, I turned my attention towards equities. And I'll tell you what happened when I did that. Well, how do I buy equities? I use my infamous algorithm to buy equities. And you may remember, even before anything makes it to my algorithm, I put it through a couple of filters to make sure that there is enough trading volume, the company is not in serious debt, but I also include things such as, do they pay a good dividend? And in some cases, I would say, are they part of certain indexes? For example, are they part of the S&P 500? Are they part of the NASDAQ 100 and so on? So I've created a list of symbols that I put in my algorithm, and then I look for the change in MACD. It's a derivative of the MACD called the histogram. It's a derivative of the histogram where does the MACD cross the signal, and at what rate is the MACD accelerating? Using that, for example, if you were to look at MU over a long period of time, when I say long, you can see 3 months. In general, this is an upward trending stock. And so if I looked at the slope of the histogram, which is the MACD generally going above the histogram? Above the signal line, the answer would be yes on many, many days. And so the algorithm would say, keep buying and keep buying. And you can see the blue line is the MACD, the yellow line is the signal. So I keep, accumulating MU, except there are days, especially in the last couple of weeks, there are days where the MACD dips, it comes back, it dips, it comes back. And when it does that, it's a little confusing because you don't know whether this crash is going to come all the way down here or it's going to go right up. So the algorithm is working, but it's not perfect in something like Micron. What about Flex? You can see that Flex has taken a decisively lower turn. And if you look at its MACD, you can see that its MACD has decisively gone below the signal, and the algorithm has not recommended Flex, and it was right. What about ENS? This thing cannot stop. It has taken off and stayed that way. And the algorithm says keep buying, and I have a very nice allocation to ENS. So overall, I can see that the algorithm generally is right, but it has some flaws. So what are the blind spots? And I got hit by a couple of them in the last 3 weeks. In periods of increasing price in general, the algorithm would give me those stocks to buy and buy more of, and I enjoyed the run. Except in times where there is a decreasing trend line, and as you have seen lately, one day is down, another day is up, one day is down, another day is up, it has been chaotic. In periods like that, I used to have stop limits that would protect my gains. Well, it hurt me. Here is why it hurt me. If a stock like MU goes up and down and up and down and up and down, well, when it goes down below my stop limit, I end up selling MU and I incur a huge realized short-term gain on which I have to pay taxes. What do I do with the cash that landed? Well, my algorithm on the next day says, oh, go buy MU. And so I go buy MU. Wait a second, I just paid taxes on MU and I buy it again and it drops a little and the stop limit triggers, you see the problem. So this is what I meant by how do you chase momentum in a down market? And I developed a strategy. I'm sharing this with you. I don't know if it is correct or not. And that's why I keep going back to the algorithm to make sure I did it right. The algorithm, as it was, triggered a whole bunch of stop limits and created a lot of gains for me. There were stocks that were at a loss that went into a deeper loss, and that also triggered losses for me. But as you can see, overall, my gains were much higher than losses. Having said that, it created a big tax problem. And so I had to now figure out what do I need to do. And so I started dumping some of the stocks that were at losses to try and offset the gains that were created with the stop limits. And it kind of really irritated me because now it generated realized profits. I would love to sit on unrealized gains because I don't pay taxes on them. I don't want I don't want realized gains. So what did I do? I did something drastic. I deleted and removed all the trailing stops. And then I went back to my pickings and said, well, how am I picking it? I pick it when the MACD crosses the signal line. Is it enough if it crosses one day, goes down another day, crosses one day, goes down another day? That's what happened in the choppy market. So I introduced a tiering system in the algorithm. What is the tiering system? This would be like an ENS where the MACD is just rocketing high, well above the signal line, and there is a buy, buy, buy every day that the algorithm is spitting, there my allocation would be very high. The next tier would be 4 out of the last 4 days, it's a buy, but it might have not been a buy on the previous 2 days. And the last tier would be it's just emerging out of a downturn. We don't know how well it is going to go, but we got to watch it. And so once I had these tiering systems, now I'm putting it to test. And so, for example, a couple of days ago, the system said Hormel Foods is waking up. Remember, tier 3 is waking up. BSX is Boston Scientific. O'Reilly is having a reasonable run. EPD, Enterprise Products, is screaming. And Arch Capital Goods, the insurance stock, is on a meteoric upward rise. So this gave me a method to figure out stocks that were steadily increasing and have been increasing, those that are middle of the road, those that are just waking up, and I could then get on it. So here is what I learned with my algorithm. If there is a big crash, because I have a tiering system now, I don't wake up on the very next day. I wait for 3 days. And those 3 days is a little bit of a period of uncertainty, so I'm still tweaking to figure out what I need to do. If I had a method to wake up earlier, that would be great, but I don't want to trigger stop limits either. So there is one other exciting thing that I'm working on. I am working on what I call the yield station. This is my own interface where I can trade multiple stocks with one click. So when my algorithm gives recommendations down the road, I hope to be able to just say, okay, take all the tier twos, buy X allocation of that, take all the tier ones, buy a bigger allocation, take all the tier threes and buy a smaller allocation, and I can just go click, click, click and be done. And that is something I'm trying to figure out. Well, so where are we in terms of returns? I still am keeping pace with NASDAQ. I was way ahead. I was 2x of NASDAQ when I had a huge allocation to gold. And when gold crashed, my performance crashed along with it. And then when a lot of the AI stocks crashed, I actually dipped below the NASDAQ for a short period of time. But I woke up, introduced the tiering system, and I'm slowly starting to rebuild my lead over NASDAQ, and hopefully I'm able to do that. I'm happy with 6.5% over the last 3 months, but I know I can do far, far better, and I hope to get there. Now, let me go to my holdings, and this is what has survived the stop limits. I do have some duds, and I want to start there first. There is nothing that is flawless. And Credo Technology, for example, is one that has had enormous volatility. Powell is another one that the algorithm recommended. My all-time favorite, Calmain Foods, has had some turbulence. And yes, I have these duds. However, I have several stars, and the algorithm has helped me out there. Protagonist Therapeutics, you can look up the trajectory of their stock. ENS, we talked about it. It is on a roll. Google, IDCC, MU is another all-time favorite. The reason these are not 50 and 100% up, if you looked at their chart over the last 3 months, they would have grown by 60, 70%. Remember, I run this algorithm every day, so I make small allocations every day. And when I buy new stock at the current market price, the total gain loss decreases because I'm adding to it every day. Having said that, I have a lot of very interesting holdings here. Here are a few more. I still have Flex, but Flex is at 4% now because, as you saw, I was in a downward momentum. And there's a bunch of pharma stocks that the algorithm picked up lately. And so I own those as well. And towards the lower end of the spectrum, barely above break even are some industrial stocks and defense stocks that the algorithm picked up. When I say the algorithm picked up, I just feed it every stock in the S&P 500, every stock in the NASDAQ 100, everything in the Dow that meets certain criteria, and I just say what I should buy. What should I buy? And the algorithm tells me what to buy based on tier one, two, three. That is what I'm doing. Um, I have lately picked up a bunch of Canadian companies, and this is just my little experiment because I keep thinking about what will Mr. Abel do at Berkshire Hathaway, and where would Mr. Abel look for the next economy that is down and out but could possibly roar. And you may remember they famously invested in Japan, and the Japanese bonds kicked up, and I'm sure they made a bundle. So I'm kind of curious about Canada. Its stock market has taken a huge hit, but they are trying to reinvent themselves. They are trying to create trade deals with many other places. If they are successful, and if you pick up the right infrastructure stock, this could be a very interesting thing to do. So I looked at some Canadian infrastructure stock that, these things are not easy to replace. TELUS is kind of like the AT&T of the US. McCormick imports spices from 70 different countries and they sell it worldwide, and they are at an all-time low. TD, Toronto Dominion, the banking company. Canadian National Railway is kind of like BNSF. And Celestica is another fast-growing company that is in the electronic supply chain. And as Canada looks to build electronic supply chains, I kind of am interested in them as well. These are all definitely not based on anything other than conjecture. So I would be extra careful about these. But my daily routine, I no longer do the stop limits because I do not want more gains. If I have losses, I will take them. For now, I need to do more loss harvesting. And I do have a max limit. So as I keep buying every day, when it reaches a certain number, I stop. And on bonds, I really have had nothing to buy. I've tried to buy, but I am building a little yield station, as you saw it, as a plugin to execute limits. Thank you for watching Yield Nerd, and I apologize for the delays in the algorithm. And when I feel comfortable, I will share them with you. Thank you, and have a nice day.